Good afternoon, everybody. Today I'm chatting with Rick Rule. In today's interview, we get into the election of Donald Trump and what it means for precious metals, as well as what we should probably expect out of him in terms of fiscal prudence. We also get into the incentive price of copper and what that needs to look like in order to start to see more capital flowing into copper names. We also touch on unloved metals like cobalt, the metrics we should be looking at on a relative basis when considering mining equities. And Rick tells us about his new bank, Battle Bank. All right, everybody, enjoy the interview. Rick, thanks so much for joining us today.
Steve, it's always a pleasure. Thank you for having me back, and thank you for coming down and joining us in Boca Raton. It was great to see you at the show.
Absolutely. So I got to start off with the big news in the headlines. Of course, there's a lot that's happened since the last time you and I have chatted, but the biggest news is Donald Trump has been reelected president of the United States. I don't know if the term reelected is correct, but he's been elected for again. Since it's happened, though, we've seen precious metals down. But when I kind of do my high level research on everything that Trump says about his policies, it actually seems like it's quite bullish for precious metals. Now, I know yesterday there was the announcement of the Department of Government Efficiency, starring Elon Musk and Vivek Ramaswamy. But I got to ask you, Rick, can you help us make sense of this for our audience? What does Trump's election mean for commodities and precious metals?
Happy to. I think in the very near term that a Trump election is good for conventional financial markets. He has said that he will argue for lower interest rates, which Wall Street will like. He will scrap, I think, any sense that Wall Street will be subjected to ordinary income tax on the carried interest in hedge funds, which Wall Street will like. He will likely reduce the growth of regulation on Wall Street, which Wall Street will like. He will simultaneously be good for gold. Let me tell you why. Gold has sold off because people believe that there will be strength in the US dollar. And I suspect that there will continue to be relative strength in the US dollar, which is to say, I think that the US dollar will continue to outperform other currencies. But I also believe that there will be continued deterioration of purchasing power in the US dollar for Americans, irrespective of what Trump does. Why? Well, let's do that. Let's do the arithmetic. The on-balance sheet liabilities of the U.S. government just went through $36 trillion, or $29 trillion net of the Federal Reserve's own balance sheet. The off-balance sheet liabilities of the U.S. government, the net present value of those off-balance sheet liabilities, Social Security, Medicare, Medicaid, not the nominal number, the net present value, exceeds, by the government's estimate, $100 trillion. If you add back the on-balance sheet to the off-balance sheet liabilities of the U.S. government, we are collectively in debt to each other to the tune of $130 trillion. The on-balance sheet number increases by $2.5 trillion a year. The off-balance sheet mid-range estimate increases by $3 trillion a year. In other words, our debt grows by $5.5 trillion a year, which happens to be the same as the gross revenue of the U.S. government. We are growing the deficit by 100% of the gross revenue of the U.S. Government every single year. This is unsustainable. We dealt with it to a lesser extent once before in the decade of the 1970s. We had unsustainable spending with regards and unsustainable off-balance sheet liabilities with regards to taxation, and raising taxes was politically unpalatable. What did we do in the 1970s? According to the U.S. government's estimate, we inflated away the net present value of the obligations, which is to say we reduced the purchasing power of the U.S. dollar in the period 1970 to 1980 by 75%. And we're going to do it again. We're going to honor the nominal value of the obligation. In other words, some old codger named Rick Rule who gets Social Security, I'm still going to get it. I don't know what it is they pay me, $4,000, something like that. They'll continue to do it. What they'll do is inflate away the net present value of that. So I'll still get my $4,000, but my $4,000 will buy me $1,000 worth of goods and services. What does that have to do with gold? In the same decade of the 1970s, when 75% of the purchasing power of the US dollar went to dollar heaven, the gold price went from $35 an ounce to $850 an ounce. Now let's throw out the first part of that move. Let's say that $35 to $100 was built into the cake because they legalized gold ownership. In other words, they took away the price control. But if you look at the decade then, the gold price went from $100 to $850, while the purchasing power of the US dollar declined by 75%. If I am correct that the only way out of the debt trap that we have is reducing the purchasing power obligation, then I'm likely right about the direction of the gold price, past its prologue in that sense. What about the Office of Government Efficiency, or whatever they're calling that beast? You know, just what we need. We need another government department to look at government departments. We're going to hire 500 bureaucrats to study 500 bureaucrats, and lobbyists are going to be bugging them, and constituents are going to be bugging them, and taxpayers are going to be bugging them. Anybody who believes in that nonsense needs to read a book called The Triumph of Politics by David Stockman. David Stockman was the director of the Office of Management and Budget in the Reagan administration. And he watched the Reagan Revolution, which was all about smaller government, be derailed by politics in 6 months. Interesting, Stephen, his background was he was a theology student. And when he was teased about being a theology student running the Office of Management and Budget, he said, no contradiction, I prayed every day. I think it's really important that when people look at the prospect of a Trump administration, that they understand that we likely get a tax cut and we likely get continued low interest rates. We are sure not going to get a reduction in spending. And unfortunately, that's going to be bad for the maintenance of purchasing power of Americans and American dollars. And it's going to be good for gold.
Well, Rick, that was quite the answer. I feel like for us degenerate mining gamblers, that was like a football coach coming in to the locker room at halftime and getting us pumped up.
Well, I think it's good for gold. I think it's bad for the country. By the way, I'm nonpartisan. I wouldn't vote for the Democrats or the Republicans. But you asked me the question, so I try to deal with the question.
So I want to ask you this because I always love getting your opinions on these types of things. And a conversation that I'm just having with, let's say, my wife or friends on the phone or just anybody is, why did Trump get elected? And when you go and you look at the mainstream media, there's this sort of idea that that Trump won because of racism and misogyny and ignorance. And I don't know if you've seen Jimmy Kimmel and Stephen Colbert, but they're basically telling people that they just weren't, smart enough to understand what they were voting for. And it's gotten to a point where it's here in the Toronto area, everybody's just so focused on, I guess, what we could call progressive issues that it's hard to have a reasonable conversation with them about Trump getting elected. And I just want your view on why Trump got elected.
The best overview I've gotten is from a Democratic Party strategist named James Carville, who is in touch with the base of Democratic support. And James Carville said, we lost the plot. The Democratic Party got so involved with the identity issues that Canada seems to be involved with, that they forgot about the fact that Americans didn't like to be lectured, that Americans were concerned about the quality of education. Americans were concerned about the rule of law. Americans were concerned about the economy. Americans didn't want to be told about their pronouns. Americans have always been in support of immigration. Immigrants built this country just like they built Canada. But the idea that there was a class of immigrant who was here illegally, that was breaking the law, breaking the law when they crossed the border, not breaking the law once they were here, and that were becoming increasingly reliant on public services, is something that disenfranchised the Democratic elite from the Democratic Party. I had occasion, this is anecdotal, not statistical. I had occasion, I become fairly close with a Mexican American family that lives fairly close to me. And I was talking about those issues with them. And they said, we're not anti-immigration. We all came across the border legally. Once we got here, we worked. We have family in Mexico who we would like to bring north. We've applied for family reunification. And when our family members come up here, they'll work. But there's a whole bunch of other people that walk across the border in front of our family. And when they get here, they don't work. There's a whole Mexican family wearing Trump hats. I didn't wear a Trump hat. You know, the biggest demographic support in the biggest demographic group in terms of quantitative support for Trump, American Indians. I think the Democrats lost the plot. When I listened to both Trump and Harris try to buy constituencies, Trump saying no tax on tips, Harris saying special subsidy for African American entrepreneurs, first-time home buyers. This is just traditional politics. The idea that you're trying to buy your way in office by bribing folks. The Democrats' increasing focus was on a constituency that they dealt with: college professors, bureaucrats, the elite press. The consequence of that is that their former working class base, the trade unionists, the truck drivers, the field workers, felt disenfranchised. I know I hate to play some of the cards, but they weren't particularly interested in having their daughters play against boys in sports. It wasn't a big issue to them, but you combine that with the boys walking into the washroom, that became a little bigger issue. But the really big issue was having those two infractions compounded by having the Democratic candidates lecture their former constituencies on what ought to be their value. Trump said, "You're great. I love you. Do what you're going to do. Wear your hat backwards if it makes you feel good." And the Democrats said, "You need to concern yourself with other people's pronouns." Now, remember, a third of the country is elated. A third of the country is despondent. And a third of the country couldn't care less. They didn't like either of them.
Yeah. Well. Speaking about that, I'm sitting here in Canada. I know you've spent. I don't believe you are Canadian, but you spent time in Canada. Definitely. I recall our last interview in Vancouver. I know that you were, I believe, previously an analyst in Winnipeg. You told me when we were having some drinks in Florida. So just sort of on this train of thought here, let's talk about how it impacts Canada. When Trump was elected, the next day, Chrystia Freeland, our finance minister, deputy prime minister, did a press conference, and she basically made it sound like it was a national day of mourning, that we're going to get through this. We've seen this before. Canadians are strong. And I like, you talk about the Democrats losing the plot. it's just unbelievably frustrating watching how this is how our government, we're going to have a new president in the United States that's going to come in here with a whole bunch of new policies, and our government can't help but make it sound like he's undeserving and just a terrible thing for the world. How do we expect Trump to possibly want to help Canada out when it comes to negotiations and policies?
Well, I think relations at the top will be lousy. I don't think the Liberals, the NDP, the Bloc Québécois, or the Greens have any use for Trump at all. I think they regard him as a threat to their philosophical existence, which is accurate. And I don't think Trump has any use for them. And I think it benefits Trump to bait them. I think it benefits Trump to mock Trudeau to Trump's base. Certainly, he played that philosophical card in his first election. That probably hurts Canadians' feelings, whether or not they like your prime minister or not. They don't want to hear him described as Trump did and will describe him. From a practical benefit, my suspicion is that some aspects of the Trump administration will benefit Canada. It's highly likely that federal opposition to the Keystone Pipeline will go away. Your prime minister doesn't believe that there's a business case for the exports of Canadian oil and natural gas, despite the fact that it's the largest single source of revenue for Canada. And an administration in the United States that allows more access and egress of Canadian oil and gas to global markets will benefit Canada. Your prime minister doesn't see a business case for taking Canadian natural gas, which is priced at $1.50 Canadian per million BTU in AECO, and selling that same gas in Rotterdam for $13.50. And it may be that your prime minister will not allow any liquefaction plants to be built on the Canadian East Coast. There's nothing Mr. Trump can do about that. But Mr. Trump will allow lots of liquefaction plants to be built on the U.S. East Coast, and he will allow the transmission infrastructure to exist, which will allow the sales of Canadian natural gas to take place without having to go through Quebec. In that sense, Canada will benefit. Trump will also lower the barriers, I believe, to resource beneficiation. And I think, unfortunately, he will also subsidize it. I say unfortunate because I don't like to be the beneficiary of theft, of stolen properties. I don't believe in subsidies, even if I receive them. But I think that Trump will actively subsidize resources like critical metals, which I think Trump will include nickel as one. I think that Trump will subsidize uranium, where it strengthens U.S. access to the supply chain. So I think that mining companies in Canada, be they juniors, be they processors, be they intermediaries, or be they seniors, will face a much more benign regulatory regime and will be positively euphoric about the financial scheme that they experience under Trump. I believe that the gold-centric part of the Canadian economy will do well because although Trump won't do anything to subsidize it, Trump will, like his Democratic counterparties did, destroy the purchasing power of the U.S. dollar, which can only be good for precious metals prices.
It's interesting too. We were chatting with a company who I'm not going to name the company, but I might give enough tidbits that our audience can figure it out based on who we've had on over the last couple of months. But a company who's getting close to the 1 yard line of opening a copper mine in Canada. And I talked to them about the regulatory issues in Canada. And something that I thought that was really interesting is that they told me that they are regularly in conversation with Pierre Poilievre, who's trying to figure out everything he can do to create a flourishing mining industry in Canada.
I don't want to comment particularly on Canadian politics. My suspicion is that rural Canada would prefer to be unshackled from the Laurentian elites. I think in terms of resource development in Canada, by the way, I think this is a good thing. It's becoming increasingly important to have local favor and First Nations favor. And I think that's good. The truth is that in both Canada and the United States, the center, Washington and Ottawa, respectively, collected the rents, and the regions got the shaft, literally and figuratively. And the idea that local areas have more to say in regulation and receive more of the benefit is a very good thing. To the extent that a copper mine, as an example, is being built in the Northern Triangle of BC, would be an example. And their partners, their regulatory partners, were the Tahltan First Nation. I would suggest that their political risk is very, very, very low, because the Tahltan First Nation will go to war against the provincial government and against the federal government as needed to support economic development that supports the Tahltan First Nation. And I sort of believe that the tide may be changing in much of Canada with regards to rural development, because rural people have been ignored in Canada in favor of the urban Laurentian elite for a very long time.
Yesterday, I was chatting with Brian Dalton, the CEO of Altius Minerals,
Wonderful
and
human. Wonderful.
it was a very insightful conversation. I learned a lot from it. And one of the things that we chatted about was sort of the due diligence process and the internal processes that they have over at Altius when it comes to evaluating projects and sort of how they think about deploying capital. And something that he said that they talk a lot about is that incentive price for copper, where like what's that price for copper where capital really wants to start flowing into projects and makes copper interesting. He seemed to think it was probably somewhere in that $6 range. Do you, do, do you think that that sounds about right? And do you think that we're at that incentive price right now for gold sitting around $2,600?
I think the incentive price for copper is probably lower. Uh, it really is a function of the interest rate, to be honest with you. You can't discuss the incentive price for a $7 or $8 billion project unless you add back the cost of capital. And so I suspect at today's interest rate, the incentive price for copper is more like 5.25, 5.50. If you deregulated interest rates, if you got the Fed out of the interest rate market, if you didn't manipulate, in particular, U.S. interest rates, I think the interest rate would be materially higher than it is today. And that would necessitate a materially higher copper price because you have to overcome the cost of capital. I'm not smart enough to say what will happen politically to interest rates. And it could be that Brian is implying a more market sensitive interest rate when he establishes his incentive or reference price for copper. I think the other thing that Brian has done, which is probably wise, is that when I establish an incentive price for copper, I use historic norms for social rent, taxes, royalties, off concession, direct expenditures by mining companies to curry political favor. Aggregate social rents around copper for the last 10 years have been increasing at double-digit rates. And if, as an example, the Chilean government continues to attempt to kill the goose that laid the golden eggs by increasing, in particular, off-concession expenditures and tax and royalty, then the incentive price goes up. So if in establishing the incentive price for copper, what Brian has done is increased the expectation of social rent in his pro forma to match the last 10 years trend, he's probably right and I'm probably wrong. My number is backwards looking and his may very well be forward looking.
It's funny you say that when we talk about that sort of increasing in social rent, because What one of the things he said, and I shouldn't just be stealing everything from that interview and bringing it up here, but I just thought it was fascinating. He actually said that he thought that copper was more interesting 10 years ago at $2 than it is today at 4. And that could be exactly what you're talking about.
So that's a conversation that Brian and I have had for 30 years. I should say, I think I was shareholder number 5 of Altius.
Of
That goes
course.
well before it was public. And I've known him for a very long time, since he was a pimply faced geologist in Newfoundland, third year student, very long time. And what Brian has learned, I think, very well, is that Brian's an instinctive contrarian. An instinctive contrarian buys a commodity when it's distinctly out of favor. So if you think about it, look back when Ross Beatty started Lumina. The copper price then was 85 cents. And you could buy projects that made no sense at 85 cents, but would be economic at $2 for almost nothing. Ross Beatty bought projects that had $100 million spent on them by major mining companies for $3 million because copper was out of favor. If you buy a commodity when it's so out of favor that the selling price of the commodity worldwide is less than the average cost of production worldwide, well, you have to have courage and you have to have patience. You are buying something where you know that the price has to go up. If it doesn't go up, it becomes unavailable. So when copper is really cheap, in other words, when the copper producers are making no money, when they're losing money, Steve, you need to ask yourself, is the copper price going to go up or are the lights going to go out? Because those are the only two choices. You don't have copper, you can't transmit or use power. So Brian's exactly right. If the copper price inhabits a zone where, never mind, no new copper is coming into production, but existing copper mines are shutting down because they're running out of cash, and Bay Street doesn't want anything to do with copper because they can't generate any commissions from it, and investors are terrified of it, that's when you have to be greedy. If you look back to when Brian Dalton got in the potash business, there was a global oversupply of potash. The Russians were selling the hell out of it because they needed cash. Potash Corpus, Saskatchewan was sucking wind because potash was so cheap. And so Brian bought a great big potash royalty. And guess what? He got rewarded for being right, despite the fact that he was 5 years early.
So I've seen you tweeting a little bit about cobalt, and you're talking now about how you like to buy stuff that's out of favor. I'm curious, are you currently deploying capital into any cobalt projects? Are you serious about it?
I would, but I can't find anything to buy. For me to buy something thematically, I want to buy potentially a world-class deposit, a tier 1 deposit. So I want at least the target to have in situ recoverable reserves and resources in excess of 10 billion US dollars, but preferably 20. Size matters, okay? I also want the deposit to be potentially in the best quartile worldwide in terms of cost. And I want the deposit to be in the best quartile worldwide in terms of return on capital employed, but at least 25%. In cobalt, that means I'm going to be in the Congo or I'm going to be in Russia. I'm okay with either of those, except I can't be in Russia by law. What I don't want is some little tiny shitbox cobalt deposit in Cobalt, Ontario. The cobalt that works is in Congo. There's no pure plays. What you have to do to play cobalt is you have to buy a copper producer that produces cobalt byproduct. What I don't do, I did when I was a kid, but I was dumb, is I didn't play a theme to its illogical conclusion. Cobalt is going to be hot. Therefore, I can make money with, consolidated caribou cobalt. Some little penny dreadful that is looking for a tier 3 deposit in a jurisdiction that the Canadian dealer community thinks is cool. I don't do that.
But I'm going to try to correct you, Rick, and I may be wrong, and you're telling me that I'm wrong here, but isn't there a primary cobalt mine in Morocco, the Bouazir mine?
There is.
Yeah, we invested in an exploration stage company in Morocco. That's how I know that. Um, uh, I
That
got
that that cobalt mine, by the way, is not in the best quartile worldwide in terms of cobalt cost. It can't compete with Norilsk or, frankly, with Vale, who produce cobalt for free, producing copper and nickel in either Sudbury or in Katanga, or in the case of Norilsk, in Siberia. Uh, so you run the risk in looking for a pure play, which you could trade on narrative, with the fact that uh, they are likely in the worst quartile worldwide in terms of all-in sustaining costs because so many other people produce cobalt for free.
um, I got another question for you. We've been doing a whole bunch of earnings videos. That's sort of our new thing we started. Our audience loves it. We're just and
Fantastic.
a lot of them are mining related and I know you're a former mining analyst, so I want to ask you this because I feel like the one thing we're missing in our earnings videos is a quick look at relative valuation so that our audience has something sort of actionable to think about in terms of, okay, well, what's the company trading at relative to either what they're producing or what their reserves look like. I'm curious for you as an analyst, if you're looking at it just sort of high level, back of the napkin, what are those relative benchmarks we really should be considering when we're doing these videos?
Sadly, it gets a little harder than that. What's missing is quality of earnings in terms of the analysis that Bay Street does. There's a whole bunch of people that will do relative earnings, uh, EBIT, enterprise value, all that kind of stuff, and all that's useful. Unfortunately, to add value, you have to go deeper into the earnings. An example, uh, does the produced grade for a quarter exceed the average reserve grade? That means that the company's high grading. It means that the earnings are false. In particular, it means that the earnings are false if the reporting for depletion purposes is on a tons basis rather than a product basis. One of the problems that you're seeing in the mining business today, in the gold business, with all-in sustaining capital costs rising, with the gold price rising, is that the company's high graded during periods of low product prices. And the material that they're mining today is materially lower grade than the material that they were mining when the gold price was lower. So their all-in sustaining costs in the current period seem high, when in fact, really, their all-in sustaining costs in the prior periods were low. It's a discussion of the quality of earnings that you need to have when you're doing a company's earnings, not just EBIT, not just EBITDA, not just earnings, not just reported or adjusted earnings, but rather the quality and the sustainability of earnings. And that's hard. I've done that on my own channel. And for 90% of your audience, you bore them to tears. People like to talk narrative. They hate to talk arithmetic, but money is made in arithmetic. It's a really challenging problem.
Well, we're taking the Rick approach to that and doing the contrarian thing and
Good,
seeing if people like arithmetic.
good.
Um, Rick, last thing I kind of want to touch on here is I see you're wearing a shirt for Battle Bank. What can you tell us here about this bank that you're involved with?
Uh, Banking is a really good business. Battle Bank will be the seventh bank I've had deep involvement with. Um, so let's go back. In 1999, a group of us opened a U.S. federally chartered bank called EverBank. The idea was that we wouldn't have branches, that we would lower our non-interest expense by being an online bank, by having our branch be your computer or your phone. Now, it was pointed out to us that disenfranchises customers, a whole bunch of Americans. And our response was if you weren't smart enough to use your phone and your computer as our branch, you should probably be somebody else's customer, not ours. And we didn't try to be all things to all people. We didn't try to lend in 500 industries, 495 of which we didn't understand. We tried to focus on industries that we understood well and to keep life simple. That turned out to be a resounding success. Over 14 years, we grew that bank from zero in deposit to 28 billion in deposits. We took it from zero customers to 275 customers before we sold that bank to a big annuity sponsor, Teachers Investment in Annuity, TIAA CREF. And that was great. Everybody was happy. The problem was that TIAA didn't need our marketing skills because they had 1.5 million members themselves. And they already had a product base, annuities, which our customers had no use for. So all of a sudden, 275,000 customers of EverBank found themselves homeless. Given that we had sweated blood building that constituency, we felt bad about it. And so we started a new bank, Battle Bank, really to be bankers for orphans from EverBank and to rebuild that same constituency. What will make us different? No branches. First of all, our branch will be your computer or your phone. Separately, simplicity. Most banks, big banks, US banks like Bank of America, JP Morgan Chase, have 15 or 20 deposit products. You have that many deposit products because you want to confuse people. Many of those deposit products don't pay interest. What's the point of putting your money on a deposit with a bank if they don't pay you interest? We're going to have one money market fund, high yield money market fund. You could write checks if you want to. Yes, we will pay you interest on your checking account. We did it before. We'll do it again. Believe me, you'll like it. A big investment mistake that people make is being lazy and not getting paid interest. The second, in our country, we have a product called an RIA, sort of like your RRSP in Canada, retirement program. Most IRAs in our country are receptacles for mutual funds and annuity and Wall Street package products. But the legal structure exists in the United States for your IRA to actually be yours, for it to own an LLC, which could buy a duplex or a triplex or a fourplex. It could own a McDonald's franchise that you operate. It can invest in numismatic coins, in Bitcoin, and private equity. In other words, your IRA becomes your IRA, not Wall Street's IRA. Our customer, the aspiring customer, is going to love this product. It's going to cut through the American entrepreneurial community like a knife through hot butter. And then finally, on the lending side, there's a whole group of Americans that I know well who own gold and silver and own platinum and palladium. Right now, there's no American bank that considers gold, silver, or platinum and palladium to be good collateral. I think they're great collateral. If you own physical gold, silver, platinum, or palladium in an approved vaulting facility, Brinks, Loomis, or Viamet, by the way, on either side of the border, we will establish a line of credit so that you can, as an example, borrow some of the money from your precious metals account to put down a duplex, to put down a down payment on a rental property or on a weekend property. In other words, you can access the cash without having to sell the product and pay the capital gains. You can also, of course, use it as a margin facility to buy more physical precious metals. The choice is yours. And then finally, on the deposit side, we found at EverBank that Americans didn't want all their savings in US dollars. So we offered certificates of deposit in 28 countries' currencies. We're going to open up EverBank with 20. Let's say you're a Canadian businessman doing business in the US, irrespective of what side of the border you live on. If you maintain a money market account in US dollars and a savings account, a CD account in Canadian dollars, we'll do currency transactions between Canadian and US dollars for you between accounts for 50 basis points. RBC or Bank of America would charge you 200 basis points. Which would you prefer, 50 or 200?
I'll take the 50.
Yeah, that product, foreign currency CDs for Americans, generated $8 billion in deposits for us in our last bank. We think we'll do better this time. Anybody on either side of the border who does business across the border, who wants to save in US dollars and or Canadian dollars, or who wants to borrow against physical precious metals, or who believes that their deposits are best secured by a bank that's lending in physical precious metals, should check out battlebank.com.
All right. Well, Rick, thanks very much for hopping on here. It's always a pleasure. And hopefully you'll keep coming back on here in the future and updating us as we see what feels like a pretty wild time in the world, especially when it comes to precious metals. So I always enjoy having you on here. I could talk to you all day. So thanks very much for doing this. And please come back on again in the future.
Steve, I look forward to it. And I look forward to helping your audience, many of whom are probably your age, understand what a real bull market looks like. You know, when I come on shows like yours, people say we'll go through $3,000 or something. I couldn't care less. I remember markets like the 1970s when it went from $35 to $850. When Coeur d'Alene went from 10 cents to $65. Or more recently, the market 2000 to 2010, where the gold price went from $253 to what, 1700? I'm not saying this has to happen. I am saying it's more likely than not. And if it happens, your generation will be astonished at the outcome. My hope is that I can address your generation in terms of what to look for in this market and how to participate in the market without running too much risk. That's what I hope to be able to do. I really, truly think that your generation, to the extent that they participate intelligently in extractive industries and precious metals, are in for a positive surprise in an order of magnitude that they don't yet understand.
I love it. Thanks so much for hopping on here, Rick.
Pleasure. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let us know what you think in the comments section. Thanks, everyone.